stock markets.
Yeah,
Marcus.
after a few sessions in the red, Mark, US and European stock markets, they've staged a little bit of a comeback, and much of it is attributed to stronger than expected growth in the United States. In the last quarter of 2013, the US economy expanded by 3.2%. That's in comparison to the last 3 months of 2012. Remember, there was a government shutdown at the start of October, and there were fears of that weighing on growth in the fourth quarter. That didn't happen, with growth coming in at 3.2%, a little bit slower than during the third quarter, where we saw growth of 4.1%. 3.2%, though, still seen as a stellar figure this session. And the growth put Wall Street in an upbeat mood on Thursday. All three main indices in the United States closed with significant gains. So the Nasdaq in particular roared ahead, and we'll tell you why in a moment. It was much due to one particular stock. Here in Europe, the close was a mixed bag, with the FTSE in London losing some steam. Shares in spirits maker Diageo led the fall in London, as it said weakness in emerging markets is hurting its sales. Looking then at why the Nasdaq in particular traded much higher than other stock markets over on Wall Street. Shares in Facebook, they soared more than 14% after stronger than expected results for the fourth quarter. It comes as the social network giant said more than half of its advertising revenues came from mobile. It's seen as a milestone, as investors, they've been worrying about Facebook's viability on mobile devices. Shares in Google, they have also been trading higher after it announced the sale of mobile phone maker Motorola Mobility. The Chinese company Lenovo is the buyer in a deal valued at $2.9 billion. Google bought Motorola Mobility 2 years ago for $12.4 billion. Despite the much lower sale price, investors, they appear to be welcoming the sale. Google keeps many of Motorola's patents, and the deal also allows Google to focus on software and not so much on hardware, where it would be subjected to competition from the likes of Samsung and Apple. Now, Nintendo is also attracting attention. The company that created Super Mario Bros. Is under pressure to revive sales. But the president of the Japanese firm says he's not willing to change strategy. Delano De Souza has more.
The games will continue according to Nintendo's president. Satoru Iwata has refused changing the company's direction away from consoles. Despite weak demand, console prices will not be slashed. Instead, executive pay will be cut. The company has been criticized for failing to incorporate smartphones and tablets into its business. One analyst, however, feels differently.
Nintendo is in a really difficult position right now. So I think that by putting their games on smartphones, for example, this is probably the biggest piece of advice that many people are giving the company at the moment. I think that this would ultimately kill Nintendo.
Nintendo faces criticism for limited game selection compared with rival Sony's PS4 and Microsoft's Xbox. The maker of iconic games such as Super Mario and Donkey Kong has so far resisted licensing games for use on mobile apps. Gamers themselves are split.
I don't think they should get into smartphones. When I like a game, I buy the console made for the game. It's not something I economize on.
Games on smartphones are developing more and more. And what Nintendo's doing, well, people are using consoles less.
The $44 billion video games market has faced tough competition from cheap games downloaded onto smartphones and tablets. Nintendo also announced initial plans to enter the healthcare industry.
A couple of more stories to tell you about. Germany's labour market remains in good shape at the start of the year. The number of people registered as jobless in Germany fell by 28,000 this month. Analysts had predicted a fall, but not by as much. Unemployment in percentage terms also remains steady in Germany at 6.8%. And France's Renault and Japan's Nissan are deepening their alliance in the car sector. The two brands will combine their manufacturing, research and development operations. Carlos Ghosn, who is the chief executive of both companies, says it will cut costs by 4.3 billion euros a year by 2016. Renault-Nissan is the fourth biggest car group globally, selling more than 8 million cars annually. We'll see if this new cooperation deal between Nissan and Renault will make it catch up with the likes of Toyota, Volkswagen and General Motors. And with that, I'm going to throw it back to you, Mark.
Keep your eye on that one, Marcus. There is lots at stake for many French workers, of course. A very big, important sector here in France. Marcus Carlson with all the business there. Thank you, sir, very much indeed. Change of pace, change of mood. James Creedon joins us now for Media Watch. As ever, James with a whole stack